As we speak about Fuel Your Growth, how do we bring together key financial partners who are actively investing in the future of Canada's agri-food sector? And I think partners is truly what the conversation is going to be about today. It's how these different pieces all come together and how we can all solve the problems or really help you financially for the future. So I'd like to invite our Senior Business Officer from Prairies Economic Development Canada, Joya, to the stage here. We also have Senior Relationships Manager from Strategic Finance, FCC, Celine, and Senior Commercial Account Manager from BDC, Tushar. So thank you so much, you guys. Thank you for coming. I get a round of applause for our panelists to start off, please. I might stand here so I can see you all, if that works out okay.
Sure.
So maybe what we'll do is I'll just call on different people throughout it. But maybe just to start off, can I just get like a few lines of why you think panels like this exist, when we can really show people your level of collaboration? What does collaboration and working with other partners that are next to you mean to you? Maybe we'll start with BDC at the end and we'll work our way down.
Thank you. I think and all of us here are the crown corporations, and the collaboration is the mandate to help the Canadian entrepreneurs, and a bigger impact is creating the work opportunity, employment, and the bigger contributions into the GDP. So I think that's the bigger aspect of the collaboration.
Fair. And for yourself, we'll work our way down.
Yeah, I agree. I think that as Crown Corps, we're looking to provide a service to Canada, to our country, and not necessarily to compete and crowd out other players. And so, yeah, we're taking a collaborative approach, and it's good to know what all the options are.
Amazing. And for Prairies Can?
For Prairies Can, we are a federal department. We're an economic development department, and when applicants come to us, we do require match funding. So, as Prairies Can, we work very closely with partners like FCC and BDC, ATB, and others to identify really strong companies because, it allows our money to go further, allows us to leverage money to collaborate within the ecosystem.
I appreciate that. So, Joy, I appreciate you mentioning on how you collaborate, because I think sometimes the confusion that happens in the room, full disclosure, I'm married to a small business owner. I literally hear what you say 24/7, so I understand it at a different concept often, but sometimes it's difficult to know where to start. So what would you advise when a client's coming to you? Where do you start in this process?
When clients come to us, we have, various funding programs. First of all, we are an economic development department, so maybe I'll just quickly talk a little bit about what we do. We're the Federal Economic Development Department for the Prairies, meaning, we have offices in Manitoba, Saskatchewan, and here in Alberta, and we're really about driving economic growth. And the primary way that we do that is we are an investor. So we partner with communities, with non-for-profit organizations, with for-profit companies, small and medium-sized businesses, to deliver project-based funding. And that really is, as an economic development department, is to create jobs and to help small businesses grow their revenue, grow their exports. And so when you're coming to us, we do require that matched funding. So typically for our for-profit funding, you're at a scaling stage. So you've probably spoken to our friends at BDC and FCC first, or perhaps a traditional bank. When you come to us, you most likely have some debt. You have some investment already.
Fair. So we're just going to maybe work our way down. So for you, when you look at the differences between when we're talking about that non-repayable or cost-shared funding, the relationships that FCC and BDC and the way that you provide that support, can you maybe briefly talk about how your organization's role and what lines, how do you specifically provide that support? Like, what does it look like when someone's approaching you? Where do they start?
So for us, again, FCC's Crown Corp, that's profitable on our own. So we're providing access to capital solutions that, we charge for. And so when we're looking at a company, they come to us, they can come at early stage or at growth stage. And we're looking holistically at a structure that works for them to grow. So whether they're doing capital expansions or they're just growing into new markets or they're launching new products and need to hire new people, we're looking at everything they're doing and finding the right way that we can support them from a capital solution. And so when they've got other partners like Prairies Can or other funding programs, that's more the nice to have that we can add alongside that. But we're looking at it globally on how are they fully funding them. So it would be good to talk to us first and set up a structure, and then that can kind of layer in with what we're already
I
offering.
appreciate you saying talk to you first, because I think that's often a conversation that's had. I know Anton and I've had these conversations many times. When do you start the conversation? What do I have to do? So from your perspective, when do they start?
I think BDC being a development bank, I think the early conversations is always a good, regardless of what is the end goal. And what we provide is, some of the times the BDC and FCC will cross the path on the same scope of work because we both financing. However, we financing in a different scale, different scope, different aspect of the businesses. Primarily, what differentiates BDC is our advisory solutions as well that can help on the operational efficiencies or planning and implementations. And I think that tie with the app as a new program with the scale, and I think that is a good synergy coming up. To the answer to your question, I would say is, if the entrepreneur is asking the question that, am I ready for the growth? Am I need financing or capital investment to support that growth, and that doesn't have enough support from its own balance sheet of income statement, I should talk to the partners. That could be FCC, that could be BDC, that could be their own primary bank, and we collaboratively work together to help in that situation.
So each one of you at one point has mentioned investment readiness. So what does that look like? Like if I'm coming to you and you say, what does good look like? Or what does the proper timing? We're saying, come to me from the beginning. But when we speak about investment readiness in particular, what are you looking for? Maybe I'll start with you here over here.
Sure. Yeah. So as I mentioned before, for our for-profit funding, which is probably the most applicable for this audience here, is we really do look at growth stage companies, scaling companies, and that looks very different in different industries. And so what I would say for the food and beverage manufacturing industry, you, like I mentioned before, you've most likely have had investment and you have some debt. We do require match funding. We have a grants and contribution model for funding. So we have various funding programs. And you can go to our website. I'm around today. But that requires you to have some backing into a project, and in terms of scaling, you have some traction in the market. You've already had some success with the product in the market, and you're scaling that product. Maybe you're expanding. So we're really looking at companies that are dominating a market, and they're really on that growth trajectory. So we traditionally say we look at companies that have 20% year-over-year revenue growth. That's not a hard and fast rule, but we are looking for companies that are seeing steady revenue growth year over year. And in the food and beverage industry, that's most likely companies starting from 500,000 to $1 million, but more realistically, we're looking at companies with $2 to $5 to $10 million in revenue.
I don't want to gloss over what she said at the beginning. So Prairies Can has funding available on their site for some companies in the room. And I've had many people stop and ask me, what does the Tariff Response Fund actually mean? Or how is my company applicable? And Joya's just given you a wonderful opportunity to say she's here. So please, if you have questions about these programs, they exist, they want to help your company. If it's applicable to you, please take the time to check out what they're doing at Prairies Can right now. We're very lucky to have scale part of the work that she's explaining, and we're very happy that our navigators are going to be able to help you on this journey. But there's nothing better than to have an opportunity to talk to Joya herself. I know she was a big part of making this whole scale program come to fruition. So I encourage you to take the time. I think from all of you, when we were just talking about what this success is there anything that you think of when you think like a business falls short, that maybe that they're missing in that first conversation, or that you would love to start the conversation with, that we can all keep in mind when we're approaching you? Please, anyone, yeah.
I think where we find the business come short is the clear understanding of their growth plan. So everybody wants to grow, everybody wants to capitalize the opportunity, but I think the forecast doesn't align with their total plan. And also, how much leverage they can go. So I think there is a little bit of financial education that should go hands in hand with the management and governance depth of working in scope. And that's where we see a bit of a gap.
Go ahead.
So I guess something that I'd say I've been seeing over the last couple of years is most of the time founders and entrepreneurs want to find the lowest cost of capital, which makes sense. However, that sometimes comes with a trade-off, right? So if you can get capital at no cost, it may be that, hey, you can access this capital, but your company has to do X, Y, Z. Or here's a low cost of capital, but we're going to keep you under some really tight restrictive covenants because, we're not getting compensated for very much risk, so we need you to stay really tight. Mm-hmm. But if you're a company that is in a inflection point, it's growing, you want to tap into new markets, you want to launch new products, that can really restrict your ability to make the right decisions for your business because you have to stick to a specific project that's being funded, or you have to stay very tight within covenants because you've got really low cost debt. So sometimes it actually is okay to make a decision to pay more for capital that's flexible, that's going to allow you as a CEO to pivot and make different decisions. You launched a product here, not working, not good market response. I need to pull back. It cost me some money, but now I'm going somewhere else. And having a partner that you're actually paying a bit more for the capital, but it's got open flexibility, it allows you to now go and spend your money elsewhere. Or equity partners, which is the most expensive form of capital, but the most flexible. And so I'd say that's one mistake, is taking on cheap debt because you can get it too early, when you're still in a phase of your growth where you actually need more flexibility.
I really appreciate that. When we're looking at the future and how people can partner with all three of you and stack, when, let's say a company's listening right now and they're thinking, what I really want to look at the tariff response fund, I think this is really appropriate for my business. If a company is looking to stack that support and they're combining what Prairies Can is offering for a non-repayable or cost-shared project funding, depending on what the project is, with financing from FCC or BDC, what's the smartest way to approach that? What would you say step one is doing that today?
Oh, I can start. I think because we provide project-based funding, we often come in at a later phase. So you most likely have a project already in the works, and you've gone to your traditional bank, you have some of that, maybe you have a line of credit, maybe you have a loan, maybe you've worked with BDC or FCC, and then you come to us. The tariff response funding isn't relief funding. It is for companies that are competitive, and they were strong and viable before they were impacted by tariffs. It's just to help companies, remain competitive. And we have non-repayable options under that funding program, and we have repayable. So non-repayable up to $1 million, but that you still do need that match funding. So we come to sort of, because it's project-based, often, let's say, for example, you want to pivot and implement a new product, and you need to expand your operations. Maybe you go to an FCC or a BDC to expand a building. We can't buy buildings. We can't buy buildings. We can't buy land, but we can outfit with equipment. So, and we can help you with expertise. So, if you need to, find some, personnel, some new personnel to expand into new markets, for example, and some new robotic equipment, that we are your stop. But we are typically last.
So if they're coming to you guys first, what do you want to see? What are you looking for if they're thinking like, you know what, I'd like to get some of this stackable funding? What's kind of that key point that you want to see first before you'd recommend to stack?
I guess in terms of recommending them to go and talk to another organization,
Yeah.
I think actually it's helpful to talk to a lot of us in parallel, right? And just to find out what is each process, what needs to come first. But the nice thing about talking to partners that have a big network is if we see a profile that we know that, you know, Joya works with, that we can then just bring them into the conversation. And I think all of us talking at an earlier stage in parallel is the most helpful.
I think stacking works well if we understand who does best on what, right? And another good thing is us as a federal crown organizations, we are complementary lender, and a lot of the places we actually comes after the private banks. So what helps on that case is if the client or the prospect is reach out to all of us and understand what we do good for, and then allow us to have conversations at the same time with the full transparency, absolutely, and it will allow us to navigate any structure for them and also guide them in a meaningful way, so it helps them to achieve the end goal.
Fantastic. I want to leave on before we get questions. If anyone has questions, please put your hand up, and I'm happy to walk around and bring the mic to you for the questions. I'll just leave you all on one last question. When we look forward, you know, there's some parts, and no disrespect to Anton, of Anton's slides that hurt my heart. And when we look at the industry and we're looking forward and our hopes and futures, what though for you is getting you excited about our industry right now when it comes to the financial sector?
I think the impact of the impact of the innovations, the adapt of technology, and Alberta has a good opportunity to outshine in the food and beverage. Can we add more value into the product and make it export ready, get out of the boundaries of the geography, right? I think that excites me most. I wanted to go in Japan and pick up a product that says made in Calgary or made in Red Deer or made in Olds, right? So that is something would excite me most.
I think this afternoon we're going to hear from Matt in this panel about how we can expand, whether it's at NATE or the Leduc Food Facility with Alberta, what we're looking at and how we can get the most out of everything for yourself.
So thank you for this question. And I think some of the previous presenters, and Anton had mentioned this, you know, we're seeing there's a lack of access to growth capital in Canada. And I think from my perspective and for FCC, we're seeing a major opportunity for Canada to become a more competitive global player by introducing more innovation and technology and helping it to get adopted across the entire supply chain. And so in 2024, FCC launched FCC Capital, which is looking to address that lack of capital in the market. And so what we've done is set aside $2 billion to invest over the next 5 years directly as equity investments into companies, as well as into other funds that can invest into earlier stage innovation and technology in Canada. And that's also started to crowd in more capital from other global venture capital players that have seen, hey, there's a big investment happening in Canada. This is just happening now. And we've pulled together a coalition of venture capital firms that have also agreed to commit $5 billion over the next 5 years into this sector as well. And so we're trying really hard to start bringing that capital here. And so that's what excites me the most, is seeing some of this capital come into play. And then also, we've developed a value creation team that's working to say, okay, so now let's fund some of this innovation and technology, but how can we help it actually get adopted on farms or in the food processing plants? And so, you know, we're building out a network of accelerators and incubators. We have a 17,000 acre innovation farm where technology can get tested on commercial sized farms so that we can actually help that get adopted. And so that's what excites me the most, is the opportunity that we have to become a little more competitive and to start bringing in some capital to fund innovation in the entire food chain. an egg chain in Canada.
If you haven't had an opportunity, please check out FCC's website. You can really learn about this fund and how it can help your business. Also, on a positive side, the Let's Grow Canada campaign is so exciting and so much fun. If you went to FCC's conference this year and you got the awesome new scarves, I've been rocking it constantly, but it gives us all an opportunity to tell our stories. And that's a big part of what Made in Alberta is also about. It's giving you a platform to show yourself on the bigger stage, whether it's your chai or whether it's your cookies, whatever you're making, it gives you a chance to have really your voice shown and give you that platform that I've seen videos get some pretty amazing hits, so it's really special. So thank you. And for Prairies, Ken.
Yeah, for me, I would tie it back to what we sort of started with. I think that there is a lot of collaboration in the agri-food space in the Alberta region. I know that, looking around the room, there's lots of people that I work together with to look at companies and how we can help them grow. So I think that is really exciting. And I actually think that there's a lot more focus. Not everyone will agree with me, but I think there's a lot more focus on agri-food right now. And I think there's a lot of great opportunities. It's really great to see some of the things that we've invested in come to life, like the SCALE program that's been launched. That's really exciting, and some of the things that we can do in the future. Right now, food security is a priority for the government, and that is directly attached to food manufacturers. And so we will be receiving some new funding under the Regional Tariff Relief Funding Program, or Response Funding Program, and that's really exciting to see money carved out specifically for food manufacturers, because I don't think we've seen enough focus on that in the past.
Does anyone have a question from the audience that I can bring the mic to you right now? I'll give you a second in case anyone's thinking, and then we'll wrap it up. I'll try one more time with you guys. I can only imagine how special that is, Joya, for actually all of you. I feel like if you've had an opportunity to be with AFPA for a long time, we have Melody, who's really been our chief cook and bottle washer in our association for so many years. And when I talk to companies, it's like the proud aunt moment when I talk to Mel about those companies. So I can only imagine like proud parents or proud aunts and uncles, however you look at your businesses that you support. I just want to give them a round of applause and thank you, and truly take time. Their LinkedIn profiles are there. If you get a chance to talk to any of these people, they're really here to help you. Thank you, you guys.